Welcome back, everybody, to another episode of Money Moves by KTVA ECU. We are so excited you're here. If you've been considering buying a house and you're wondering about the home loan process, well, we may just have all the information you need, so stick around. Welcome to Money Moves Podcast, the financial podcast without all the fluff.
We're Molly and Caroline, two financial marketing coworkers turned besties, and we're here to help you take control of your cash.
We'll break down everything you need to know to make smart money moves and hopefully not bore you to death.
Think of us as your financial hype squad, bringing you real stories and tips to help you start stacking your cash.
So let's start making those money moves.
We are not financial experts. We are just two regular people. Always do your own research and ask a professional for personalized advice.
I don't know about you, Caroline, but when I first started trying to figure out how to do a home loan, I really didn't know anything about anything.
Not a zip, zero zilch. Not a thing.
It's like one of the biggest purchases you make, but yet you have no idea like where to even start.
No, I think most people kind of go into it and they don't know what they're doing at first. And so I'm really excited for this episode because I think it's going to illuminate a lot of the different steps that you'll walk through in that home buying process that people might not even know, even if they have bought a home, honestly.
Exactly. Yeah, because I feel like every single one is different and it's based on the situation, the home, the state.
Yeah.
I mean, so many things. But I'm excited today too because we have some guests, plural. Yes, plural today. So our first expert that we have on the podcast today is here to talk about the home loan process and the application. So welcome, Judd. Judd, thanks for being here. We're so excited you're here. Judd has been with the credit union for almost a decade, has been in the financial industry for over 15 years we were talking before. So, a little bit of knowledge for us. And you've got to experience, in the branches, helping people one-on-one. And we were talking before we came on, it's just being able to help people make that big commitment into their dream home and helping people, right?
Yes. Mm-hmm. Yeah, that's ultimately the goal that we want to strive for. Get you in that house.
So walking backwards from the goal, where do we start in the home loans process? What does that kind of look like in real life when you're looking to kick off, your home buying journey, honestly?
Yeah, so really where you want to start, I would say, is kind of evaluate where you are in your own personal process, right, of obtaining a loan. Some things that we look at is, do you have credit built up? Do you have, money for down payment, closing costs? So do you have those savings available? And then also, looking at kind of where your debt is, are you overextended right now, or are the things you can cut back on? So really those are kind of the first things that a first-time home buyer should really focus on.
Consider, I remember even when I was getting my next home loan, I feel like it's something that you can look at even if you've already had a home loan before. It's just kind of looking at where are you, what's your goals, how much debt do you have? I feel like that's a pretty common thing that we talk about. But sometimes it's just good to see I've heard a lot of our home loan officers talk about even if you're thinking a year from now buying a home, just come talk to us, right? And so if I was someone that maybe I'm not ready right in this minute, but I have no idea where to even start, should I go ahead and come on in and talk?
Absolutely. I mean, it never hurts to be over-prepared for it, to find out all of your options. Right? Because there are ultimately a lot of options out there, whether that be loan products or, the term of the loan, whether you want to go shorter term or longer term. So really all of those things are very important to get on that path as well, right? So you're not second guessing or even just guessing, hey, is this going to work to, meet my goals of owning a home? You can kind of get on that right path, take the correct steps to be as prepared as possible.
Yeah. So let's say I'm ready to walk into the branch. What documents? What should I bring? Or should I bring anything? What should I bring?
Just come in empty-handed? Do we come in with a file folder? What does the first talk look like once we are ready?
Step one, get a file folder.
Yeah, first one, accordion folder.
And I actually printed off a little list here of generic items.
Okay, perfect.
So that you can be as prepared as possible, right? Yeah. Just for the initial conversation. But some things are going to be 2 forms of ID. Are going to be important because you have to prove who you are, right?
Yeah, actually, makes sense.
Yeah, checks out.
Income is also very important,
Okay.
right, in qualifying, so we can determine, what you qualify for, kind of your max limit, how much you want to go up to.
Yeah.
So last 30 days of pay stubs, last 2 years of your W-2s or 1099s, whichever apply there, and then bank statements for the last 2 months.
Okay.
So that we can kind of see, what you have saved up, kind of your assets at that point.
Yeah.
So kind of determine where you are in the stage so that we can, as a loan officer, guide you to, work on this or maybe work on that.
Yeah.
So that we can kind of see those things and really crunch some numbers for you to get you on the path.
That's great. I love that you have a list.
Yeah, I know. That was very helpful.
Yeah, I agree. And it's one of those things I always wonder about too is like, what if I'm someone and I'm like a worrier and I'm like, well, what should I bring, 4 months of bank statements, or I have more than one bank. Do you want just my primary institution? Like, what all should they include with that or not include even?
Yeah, so the requirement is 2 months of bank statements for any current account that you have set up, right?
Okay.
So if you bring extra, that's fine.
Yeah.
But we don't need them. So we're going to probably give them back to you.
We don't need them.
You can, but we don't.
We end up with a ton of papers.
Yeah.
So if we can minimize that, then we use what we need and then go from there.
Yeah.
Right.
Yeah.
So, your primary account, but any other account that you have, because that shows assets.
Yeah.
Right.
That's
And
true.
especially as a home buyer, if you're, if we have to show that you have funds available for closing costs, down payments, things of that nature, then it's really beneficial to see all of those assets.
Yeah.
There's a time where we may ask for retirement accounts because, again, that shows assets, which can help throughout the loan process in different ways.
Yeah.
Yeah.
I remember before I ever got a home loan, one of the things that I just had in my mind was that you had to have like a big balance in order to even be approved for a home loan. And then after talking with our great home loan officers here at the credit union, that was not the case. But I do think sometimes there's this misconception that you have to have like big dollar amounts saved up. But you guys are taking in the whole picture and seeing what assets you may have and how much balances you may have at different places and how all that can kind of play into your story for your home loans.
Right. Yeah. And it's, kind of goes back. The more savings you have, the better. Ultimately, it gives you more options.
Yeah.
Right. If you have, a large amount, then you could do a 20% down payment. Obviously, that affects, lower loan amount, therefore better payment,
Yep.
things of that nature. But there's so many options out there in loan products that you can get by with, for instance, USDA, that's a 0% down payment, right?
Oh, yeah.
However, with that, there are still fees for your, closing costs, which title company, appraisals, those types of things. So you need to have something saved up.
Yeah.
Ultimately. But like I say, that's all just part of the process of gathering all the information.
Yeah.
And then we kind of dig into it deeper to see what's going to work
Yeah.
for your specific, each specific individual.
Right. Yeah.
And then go from there.
Okay, so let's say I have all my documents gathered. We're ready to kind of initiate this process. What has the potential to kind of like slow down your application? Or what are like things that people are looking to start their home buying process? What should they avoid doing when they're just getting started?
Some big things that will derail an application pretty quick is obviously we're looking at qualifying, right? So we have ratios that we have to keep in line.
Yep.
Getting new debt.
Okay.
I remember being told this.
You get that deal for 0% interest on a whole furniture set, and then that shows up on your credit report, and now that payment counts against you. So then that could, throw your debt to income ratio out of line, which then could cause an issue.
Right.
Ultimately, we ask for a lot of documents, and a lot of paperwork, right? One big slowdown is if we ask for something, please provide it. Because
That makes sense.
if we don't have the full picture of income, for instance, then you may or may not qualify. And we want to make sure that you, are in a good space, right, to be able to move forward. So having all of that information and documentation
Yeah.
just gives us the tools to help really guide
the
borrower.
Like, I think the phrase knowledge is power. It's like that is also true for you all on the side where we're trying to figure out those options for you.
Right.
It's like, well, we can't figure out the best fit unless we know the entire variables of the situation.
Right.
So it makes no sense to like hide something or omit something. It's like, just be open and honest up front, and that's what'll find you the best solution.
Well, and even the flip side of that, maybe there was a piece of the puzzle missing that was preventing you, but then now that you've brought that in, it's like, oh wait, well actually
wait a second.
yes, let's get this going.
Exactly.
So it's like it works both ways.
Yeah, 100%.
So if I'm in this home loan process, are there some things as the borrower that I should maybe consider asking my loan officer throughout the process that's really important?
Yeah. That's one thing, like you said, knowledge is power.
Yeah.
Right. Sometimes you just don't know.
Yeah.
Going on Google, there's a lot of information on Google, right? That is somewhat accurate, but can be somewhat misleading as well.
Yeah.
It's really kind of figuring out what a total payment would be.
Yeah.
For instance, like, to kind of give an example, a car loan is principal and interest. You know what your payment is each month. Well, if you're calculating how much your house payment's going to be, well, are you thinking about, your homeowner's insurance, your property taxes? If you're buying a condo or in a subdivision or neighborhood that has HOAs, those dollar amounts can affect qualifying. So really having an idea and kind of getting an estimate of those prices could definitely affect, whether you qualify or not.
Yeah.
Ultimately, one thing that we tell members and borrowers all the time is we try to explain the fees that you can actually shop for within the home mortgage process.
So what does that mean exactly?
Yeah, so there's, closing costs. Well, everybody uses a title company that does a title search and, make sure that the property's clean and all that good stuff. Well, they prepare documents, they close your loan for you, but they're also, verifying that everything's clean. Well, with that is all title companies do the same thing. Some charge more than others to do it. So you can actually shop around and not just use somebody that's listed on a sales contract or somebody. You can shop around to try to save a little bit of money, which is always good.
Yes.
If you're saving money, that's never a bad thing,
No,
in
I
my
didn't know
opinion.
that. That's interesting.
Yeah, I think that's good. And I've also heard of, and we get asked about this sometimes, even like through social and just different outings, like PMI. Like, what is PMI? And as a first-time borrower or a borrower in general, like, what should I know about that? And what's it? Should I ask questions about it? Do I have to have it? Like, what is that?
Yeah, so that is a really good question. Depending on the loan product that you decide that fits best for you, can really dictate that. If you go with what we call secondary market or government loans, which is your FHA, USDA, some of those where you're not putting the 20% down, that's going to require that mortgage insurance. However, here at the credit union, we do offer basically all of our loans, regardless of down payment, it could be 5% or 19.99%. We do not require PMI on our home loans.
Okay.
So that's a real advantage that if you're short the 20% down payment, maybe you have 10 or 15%, then you still have the option of not paying that PMI, which can be, depending on the loan amount, can be a couple $100s a month.
Right. Yeah.
So that's pretty substantial.
Yeah. Yeah. So that's probably another good question to ask your home loan officer that you're talking to, or wherever you are, if that's required or are there options without it, and what does that mean for your payment?
Absolutely.
So I like that.
Absolutely.
Okay, so going back to, we're getting in the process of things, like what is one thing that you think is a smart move for borrowers to make before applying that can make a difference in the long run?
Yeah, so more than one thing.
Okay.
Having established credit is going to be a big factor in really any loan, but especially mortgage loans. Saving, having the most saving that you can have, the most funds available, just gives you more options. So it just opens up more doors. Doesn't limit you to one product or the other. The debt situation, minimize that. One thing that I would always recommend is focus on needs and wants at this point so that you can sacrifice now to get into a home.
Oh, yeah.
To then be able to get your dream home or get more home at that point because you qualify for more of a payment.
Yeah. Wow, that was a layered answer, but those were all great answers. So that was amazing.
Well, and I liked how you brought up the needs versus wants, because we even in past episodes have talked about how, maybe a really important thing for you is the location of where your home is, not necessarily the structure itself, or maybe it is. And so I think even just having that established and having that mindset early on to really get what you want in the end is really important for your journey.
I also like how you phrased it as the savings is an opportunity because let's say maybe you're excellent. You've hit that threshold of that 20% of what you think and what you've calculated. Well, keep pushing, keep going. Because like you said, that just gives you more ammunition in the end. And even from a good like financial perspective for budgeting that we've talked about, you can take that, any extra that you have, and put that towards your emergency savings, towards a house that you might get. So I think that that's all. Like, I love the way that you phrase that as an opportunity. Like, I think that's so for valid.
Sure. Yeah. What do you think surprises, whether it's first-time borrowers or just borrowers in general, the most when it comes to like the home loan process?
Ultimately, the amount of documentation that we have to obtain. And
just
I promise you, we do not like asking for everything that we have to get, but that is just part of it.
Yeah.
We ask for the things that we have to have that is only going to benefit you in getting approved for the loan. Ultimately, that's the goal, right?
Yeah.
But, payments, when you factor in interest rates, how much that little bit of variance can change whether you do qualify or not.
Yeah.
But, it's all a bit overwhelming.
Yeah.
But that's part of what the loan officers do, right? They're there to educate, to walk you through that process. You're coming in, if you mentioned earlier, if you're, real kind of just high strung and, nervous about something or whatever, we're there to take that pressure off of you.
Yeah.
We want to make it as easy as possible. So we're going to explain things. We're going to take all the information that you've gathered on your own and kind of condense it all down to, okay, this is what's important.
Yeah.
Let's get you pointed in the right direction so that we can all move forward to there again, reach that same goal.
Yeah.
So
that's awesome.
I would say that was definitely what was most surprising for me too, was the documentation.
Yeah.
Because it was like any payment going out, they were like, what's this connected to? I was like, whoa, what do you mean what's this connected to?
It was like you've got DoorDash 27 times this month.
No, I was like, why are you asking me that? But then, like you said, it makes sense within context.
Yeah.
I wasn't one of those people that like got upset, but I literally was like, whoa, they are really digging in here. They're getting into the beefy stuff.
Yeah.
And it's just so funny because, and we've talked about this with different lending options and just banking in general, like if you've never done it before, you might have a little anxiety about it and you're not sure and you may feel silly, but like that's what we're here for. And we're going to answer all your questions and you don't have to feel dumb. Like it's a home loan. It's a big deal. So like it's okay to ask tons and tons of questions to our loan officers.
Which, speaking of questions, are there any questions that you recommend that people ask, whether it's their loan officer, like I guess their realtor, like are there questions that you recommend asking throughout the process?
Yeah. So any question that comes to mind.
Yeah. I love that. Don't hold back, people.
All of the above, actually.
There's the saying that there's no such thing as a dumb question.
Yeah.
When you do not do or have not done or maybe limited in doing home loans, there's a lot of things that you just don't know and you don't think about until something comes up.
Yeah.
It's better to ask the question than to ignore it and then find out later on that it was either detrimental or maybe there was a hang up with some piece of documentation.
Yeah.
Go ahead and ask those questions. Things to verify though, I'll say that is interest rate. Is that interest rate locked in or is it floating?
Okay.
Our loan officers do a really good job of basically asking you, do you want to lock now or do you want to wait?
Right.
Rates do fluctuate a little bit here and there. So, making sure that you're where you want to be with that. Ask about the fees.
Yep.
It's okay to, you know, the loan officer is going to give you a breakdown of what the fees are.
Yeah.
Don't be afraid to ask about those.
Yeah.
Because there again, some of those you can shop for.
Yeah.
So if it can save you $300, $400, $500,
why not?
Yeah.
save $300 to $500.
Yeah.
Yeah.
And
We're all
so
for that.
for some of our viewers who are like newer, can you explain what locking in your rate versus having that float like looks like and what does that mean?
Yeah, absolutely. So basically when you lock your rate in, that is what you're doing.
Yeah.
Right. So if it's at, 5.875 and you decide to lock, then that rate is going to stay where it is, whether rates go up or go down.
Yep.
Yeah.
Now, if the market is fluctuating and you feel like you may want to try for a better rate,
Yeah.
then you can let it float,
Yep.
which means we get the process started. But if rates go up and don't come back down, then you're kind of stuck at that higher rate.
Yeah.
You may get lucky and they drop.
Yeah.
And then you call the loan officer and say, hey, I noticed the rates just dropped.
Lock
Let's go
me
and
in.
lock me in. Right?
Yes. Right.
Which is the
now.
ideal situation.
Yeah, exactly.
But it doesn't always work
that's
that
the
way.
example of asking the question, people. Just ask it.
Just ask.
So I was like,
Absolutely.
I know someone out there is watching and they don't know what that means. So you just said.
Yeah.
Yeah.
Yeah. Well, you've covered so much.
Yeah,
and,
this was great.
This has been awesome. I really appreciate you coming on today and
Absolutely.
sharing everything about home loans. I appreciate you just making it seem easy because that's what we're here for.
That's
Exactly.
what we are here for.
Yeah.
Yes.
Judd did so great telling us about the home loan application process, but now we want to talk about what happens after you hit submit and it goes to the underwriter. So we have another home loan expert here with us. This is Jessica, and she's here to walk us through underwriting and whatever that means. What does it mean, Jessica?
Yeah, what
Tell
does
us.
that mean?
So I like to use the analogy of either a puzzle or a book.
Okay.
So by the time the file comes to us, we are really just making sure the pieces or the pages, do they fit together? Does it make sense? Can we verify it? So really it's kind of just the end of the process and we're just making sure everything fits together properly.
Yeah.
Yeah.
Wow, that was a great way of explaining it.
Yeah, it didn't seem so crazy. Like you hear underwriter, you're like underwriter, undertaker. What is
Yeah,
this?
I'm like,
I don't
what
know
are we
what
doing?
that
We're going to
is.
the
Scary
underworld.
sounding, you know?
Yeah, it does
Yeah.
sound scary.
Okay, so what about like when you're reviewing the file? What matters the most? What are you looking at the most?
So I wouldn't say that one thing specifically is more important than the other.
Okay.
We kind of go by basic, what we call the 3 C's. So it's credit.
Okay.
So
Okay.
we're looking at credit. We're looking at your history. Are you making payments on time? What do you have out there?
Okay.
We also, what's called capacity. So the capacity is, can you financially hold your current debts plus the proposed mortgage payment?
Okay.
You know, are you comfortable? Are we putting you in a comfortable situation? for
Yeah.
that? And the last one's collateral. So the home you're purchasing or the home you're refinancing, is it, since we are using that as security, is it marketable? Does it need repairs? Is it something that in the event we had to default, can we make our money back on it? So we really look at everything together, and there's not really one thing more important, than the other when we look at it.
Yeah.
I think the big thing that I take away from what you're sharing is that not one thing is going to hold all the weight because you guys look at the full picture.
Right.
Yeah.
You're trying to see, okay, how will this work for this member or this person? Is this the right home loan option based on all of these things? Which I think, sometimes when you're just going to apply for a loan, sometimes I think there's a misconception that it's either yes or no based on credit score. Well, not always. And as you just said, there's so many things that we're looking at to help create a better picture, to complete the puzzle.
Yeah.
Right. And the credit union, I think, because we do keep our loans in-house, we do have compliance guidelines we have to follow, but we do have that gray area that just because it doesn't fit in a specific box doesn't mean that we can't do it.
Right.
So we kind of have that flexibility, which is great.
Yeah.
Let's hone in on that first C for a second, though, because I feel like that's where a lot of first-time borrowers might have questions. So talking about credit score and how it is one piece of that puzzle, are there any like mistakes on a credit report that might, get a little hairy, that might cause a situation for someone when y'all are looking at it?
I hate for people to feel that way because we're humans. We're going to make mistakes.
Exactly.
You know what I mean? It's a learning process for everybody, no matter where you are in life. So there isn't one thing. If you have a late pay on something, most people and borrowers don't even realize that it's on there until we pull their credit. You know what I mean? So some people don't even realize and until we address it. And truly, most cases, all it takes is us addressing it. And, well, what happened? You know, because if we have an explanation and it makes sense with the story of the credit report, it's not going to make or break. I mean, it's different when you're talking about bankruptcies, foreclosures. That's a whole separate, entity in itself. But just your basic late pays on things, we're human. It happens. Life, happens. And there's things that we can forget, easily. And that's not going to stop us from saying yes or no.
Yeah. Right. 100%.
So what about credits that are either newer or considered more thin? Maybe I don't have a lot of credit built up, a credit history. How does that play into how you all look at the full picture?
We definitely don't penalize anyone for that.
Yeah.
Because we expect, especially the younger borrowers, we don't expect you to have an extensive credit history. I mean, that's part of it, and we even have older generation that has paid cash. That don't have it. And we do not have what you would say a necessary minimum trade line requirement that we have. So that is also not something that we would say, no, sorry, we can't do that. That where most lenders maybe would. But we definitely take the understanding of that when it comes to our younger borrowers especially.
Speaking of those younger borrowers, I feel like a question that is thrown out there a lot is student loan debt. What does that look like? How is that, portrayed on a credit report? So maybe you can provide some insight that eases minds about student loan debt on that credit report too.
Almost everybody has it.
There we go.
I mean, I have student loan debt that I'm still paying on, and I'm not doing anything that is even related to what I went to school for. I mean, it's just, it's part of life, and what we do when we look at that is if you're set up on a payment plan, we use the amount that's on that payment plan. Or if your credit report doesn't show a payment, we typically use 1% of the balance as the payment for that. But don't be scared. Don't be scared that that's going to disqualify you either, because almost everyone has it. You're very fortunate if you don't. So don't let that scare you.
That is great advice. I think that probably eases so many minds to hear that even being said in the same sentence as home loans. So,
So are there any common misunderstandings that people may have about underwriting or the underwriting process?
I feel like it is scary. The word underwriter is scary.
I was just about to say, this segment is so peaceful compared to the word underwriter itself.
I know.
We all joke, the underwriters here, we joke that we are the people behind the curtain. Because you don't know who's behind the curtain. That's why you want to know who's back there. It's like the intrigue of it. But truly, we are only there. We verify documents. You know what I mean? We're verifying the documents that are given to us, and we're making sure we are in compliance. And are we putting you in a good financial position? Are we putting the credit union in a good financial position? So I promise it's scary sounding, but it truly is not anything.
I feel like in the Disney movie, Hercules, when they're like, down in the underworld. I feel like that's what I hear whenever I hear underwriter. I'm like, we're going down. To Hades down there.
That is a very good analogy of it. Yes.
That's so funny. Which is like, you're the exact opposite of that with your cutesy pink sweater and calm voice.
She is really wearing love.
Yeah, I know. I'm like, I want to go to underwriting. You're so calm. Like, I love this.
Yeah.
Okay, if borrowers could control one thing that would help your process in underwriting, what would it be? What would your suggestion be?
So what I would say is prepare ahead of time. Even if you're not looking to purchase in the next six months to a year.
Yeah.
We utilize the credit union's services. I will say, I will preach that until the end, because we are here truly to work for you, and we're kind of an unbiased party to that. So we will always have your best interest at heart.
Yeah.
So always just prepare and come in 6 months to a year before you plan on really purchasing, and sit down with somebody and say, hey, this is where I'm at. This is where I want to be. How do I get there?
Yeah.
How do I fill in that middle section?
Yeah.
And we have some of the best loan officers, and they can give you a breakdown of cost and, okay, well, you know, your credit, let's try to get it here, or let's try to do this to get you here.
Yeah.
I mean, they are so great about trying to fill in that gap to where we can try to get you where you want to be.
You touched on something that I really wanted to hit on, that we talked with Judd about off camera for a little bit there. And that's, you know, the credit union having your best financial interests at heart at the center of things. Because I feel like when you're in the home loans process, a lot of the times you can feel pressure from different areas. You can feel pressure from the market. I think here, at least in the city that we're in, it's like you might feel pressure to go over what you're comfortable at to get to even get the house, because the market moves so quick.
Right.
You might feel pressure from different people in the process to go over what you're comfortable with. But I think you hit on the heart of it, of like, come talk to us, because we'll have your best interest at heart and what is the best financial setup for you.
Right.
And I think that that is so important to keep in mind, because people try to push you out of your limits of what might be comfortable and what might not work for your scenario, and get you in a little bit of a sticky situation sometimes.
Well, I think we've even talked about it before, and I didn't mention this earlier, but you actually have a previous life in real estate, or what am I trying to say? You were a real estate agent. That was not officer. What is it? I mean, you did that too.
I've done that too.
I'm trying to say, you were a real estate agent, so you've kind of seen like both sides of the picture for the person that's on that home buying journey. But we kind of talked about it a little bit, that sometimes you might be encouraged or pushed to purchase a more home than maybe you're really ready for, because then you want to go out and things come up and you're now the landlord, or you want to go on vacation, but your budget is maxed out because you're at the top of your budget. And so like, we'll talk to you about that stuff too if you want.
Yeah.
And so I think that's really important that you brought that up, Caroline, because we really do just want to help.
Yeah.
Yeah. And it's one of those, you know, even when I was a loan officer, it was people were coming to get like pre-approved, or how much can I get? And I would always try to turn it, because I'm like, it's not about your max amount. It's not about how much, because yes, on paper, your numbers are okay.
Yeah.
But how do you feel about that payment? You know what I mean? Like, how are you going to feel about that later on as well? Because we're not trying to take care of you just right now.
Yeah.
You know, we want to make sure we set you up successfully for the future too.
Yeah.
So.
I'm so glad you touched on that, because Judd also touched on that off camera, of like that maximum amount, like that might put you in a sticky situation. And I love that you're talking about how like, we are thinking through the loan through your future. Like, how is this payment going to do in times of hardship for you? Like, this is like, let's make sure that this payment is the right area for you for the life of the loan, not just for right now. Even like, let's make sure you stay comfortable for a long time.
Exactly.
So I love that that's our mentality.
Yeah.
Well, we appreciate you being here today and sharing with us about the Underwriter. You made it sound so peaceful and simple, and so that was really great. So thanks for being here.
You're welcome.
So we've talked about the home loan process. We've talked about underwriters. Now what's left is what happens after you close your loan. What's next? What is escrow? we have an expert here, though, that's going to help us talk about all those things. So welcome, Haley. She has been in the credit union financial world for a little over a decade, I think is what we talked about. And so tell us about home loan servicing. What is that?
You know, a lot of people don't know a lot about servicing. They get their loan and then they're like, well, what's next for it?
Yeah.
The one benefit about what we do here at the credit union is that we actually house our servicing department here at the credit union. So whenever you go and you get your loan, and typically anywhere else, they're going to probably sell that loan off. Now, not always,
Right.
but you really don't know who you're facing with.
Yeah.
So the servicing department kind of takes care of you after you close, after everything's pretty. That's who you're dealing with for the next 30 years.
Yeah.
So you've bought in with the rate, but now you're kind of buying in with how you want to be dealt with the rest of your life, or the life of the loan.
Yeah.
So in our servicing department, we obviously do payment corrections. We handle our escrow analysis and deal with escrows. So we pay your insurance and your taxes, things like that. So, yeah, we do a little bit of everything.
Yeah. Okay, so what is the benefit to, you know, knowing the institution where your servicing department is, or like knowing that that is in-house at an institution?
Right. Yeah, I think one of the biggest benefits is just knowing who you're dealing with.
Yeah.
It's not a 1-800 number that you're going to call in and then you're like, oh, hey, one for England. Yeah, like, it's just weird.
Yeah.
But you have that face-to-face. You know, the people in the branches, they're able to reach out to us directly.
Yeah.
So it's that quick turnaround. It's not calling in, getting a toll-free, and then waiting to talk to somebody that you may or may not ever get.
Yeah.
So it's just that quick service,
Yeah.
and that's what we like the most about it.
Yeah.
And the member service that these people get in the branches, they also get it back office from us.
Yeah.
Sorry.
You go.
Sorry, girl.
Yeah, we're just too excited.
Yeah. Home loans. No, I was just going to say that I think sometimes people don't realize that lenders sell your loan off sometimes, that we call. And so I remember my cousin, when he first got his loan, he said that before his first payment was even due, it had already been sold like 3 times. He's like, I don't even know who to pay. I don't even know who to pay at this point. But with us housing our own loans, you do know who to pay, and you can have that relationship with us, which is cool.
Yeah.
Right.
When what I was going to say was, you know, I think this is so important to talk about this in the process of, you know, if you are a first time buyer, this is something I personally wish that I knew when I bought my first house. Because like you said, before we even did that, our loan had been sold. Like before we made our first payment, our loan had also been sold.
Right.
And then when I came to work for the credit union and I learned that we keep the majority of our home loans in-house, I was like, how nice is that?
Yeah.
That you know a local institution that is like, that you can go to for any of the questions about your mortgage.
Right.
I was like, that's amazing. So I'm really glad we're highlighting this section specifically
Me too.
because I just didn't know this. And I think at the time it probably would have impacted my decision of who I went with for financing if I'd known this.
Yeah.
So just throwing that out there, 2 cents.
Just throwing it out there.
Yeah.
So you mentioned escrow.
Yeah, I was like, no, but hold on, back to this word.
Escrow. What is escrow? Break it
Escrow
down.
is everybody's favorite word. Everybody. Escrow is what we pay our insurance and our taxes out of.
Okay.
So what it is kind of a savings account that's attached to your mortgage loan. So you're going to put money in there month to month, and then as that money accumulates, we get your bills for your insurance or for your taxes, and we're going to pay out of that.
Yeah.
So then it's all well and good, and we're paying and we're doing all the things, but then it's like, okay, well, your insurance went up, or your taxes have went up. And so that's when we have this period called the analysis period. And that's when the members are able to kind of see where they stand. Have I been putting way too much in? Because I lowered my policy with State Farm and now it's should be lower, you know? So it's kind of a time that we can just balance and kind of see where we're at. Are you putting too much? Are you not putting enough? And just kind of go from there. But escrow as a whole is just taxes and insurance. That's what we're paying out there. Flood insurance, things like that.
Okay.
So let's back it up a little bit, just in case you've never done a home loan and you're like, what are you talking about?
Yeah, what are you talking
What's that
about?
foreign language?
So you have your monthly payment for your home loan, and within that payment is what we call escrow.
Correct.
And so you guys, when the payment is made, you take that out automatically from that payment, or does the member try managing this movement of money?
No, it is tacked into your total payment month to month.
Okay.
Whenever the member does go to closing, they'll be able to see that breakdown to know what portion of the payment is going to escrow versus their principal and interest.
Yeah. Okay.
So why wouldn't someone just manage that themselves? What's the benefit of having it in your monthly payment?
Yeah, really the hassle.
Yeah.
You know, insurance is nice because it would let you pay month to month.
Yeah.
But your property taxes, they want a payment once a year.
Right. Yeah.
So really, people having the financial stability to be able to make that payment, it's kind of a big deal.
Yeah.
So lumping that all in, it's not like you're paying us any extra. We're just holding that money for you, so that we can then make those payments on time for you.
Yeah.
From a lender standpoint, we like those escrows because if you don't pay those taxes, we're looking at maybe your house is going to the courthouse steps for a tax lien or something of that nature. So while it does protect the credit union, it is a benefit for the member to have that escrow account.
Absolutely.
Yeah. I know I like it because, like you said, it's that, especially for home loan tax or property taxes, it's that one big chunk.
Yeah.
Well, I don't have to think about it because it's broken down into little baby segments from your payment. And so I like that because I don't have to think about it.
Right.
So.
Right, absolutely.
And you mentioned an escrow analysis. Does that happen like at the same time every year? How often does that happen? Let's talk about that analysis a little bit.
Yeah. With the analysis, it does happen the same time every year.
Okay.
Typically on your anniversary date. And that just is when we look at it, make sure everything year to year still looks the same.
Yep.
How did your insurance change this year?
Yeah.
Were there any changes? And a lot of members take this time to really search and look, is my insurance premium what it should be? Am I paying too much? Do I have enough coverage? So really it's kind of a year to year point to just say, okay, what's next? Am I covered? Am I paying too much? What's the deal? And for us, it's just, is the member putting too much in there? Because we don't want to just keep money held for the member, you know?
Yeah.
So really it just lets us relook at the escrow account year to year.
Yeah.
Cool.
Okay, so you've been in home loan servicing for a little bit.
Yeah.
What is probably one of the number one questions that you get phone calls about when it comes to like escrow and all this stuff?
Probably, why is my payment going up? I've got a fixed rate. What do you mean my payment's going up?
Okay, yeah.
So it's like, okay, well, yes, it is still a fixed rate.
Yeah.
But it's fluctuating because of X, Y, or Z.
Right.
We do send those analyses out, so we're able to then communicate, look at the same document as the member, and just go through and see what's happening.
Yeah.
You know, why did it go
Why
up?
did it change? Yeah.
And things like that. I didn't speak about this earlier, but kind of one of the benefits here at the credit union for having an escrow account is that we kind of treat your account like it's our savings account. So if we see that your payment is going up $1,000, we're going to give you that courtesy call that's like, hey, bud, you may want to look at your insurance because that's kind of a steep increase, you know?
Right.
Yeah.
So really that escrow account benefit just for the member is just having that extra person to say, hey, you may want to check on this because this isn't normal.
Yeah.
So that's also a good benefit for me.
Yeah.
Or for them as well.
Yeah.
I know what we talk about this. It seems like with every employee that comes on or guest that comes on, it's like we really just want to help you. And I feel like your area specifically is like you're really just here to help the member with their escrow and their payments. And like that is what you are doing all the time. I think that's just really, again, just kind of realigns back to like why we're here and why are we doing this.
Right. Right. It really is. We're the members helping members. I mean, truly, we're essentially, I say that we're a branch inside of a branch.
Yeah.
But the branch is real estate. You know what I mean?
Yeah.
But it's like we try to give them that same home feel. And just take care of them like it's ours, you know?
Yeah.
But
I love that.
Yeah. So what if, let's just say, I still don't understand escrows, even though we've had this conversation, we've listened to the podcast, we're doing all the research. What are your suggestions if you're still having questions about what is an escrow?
I would say reach out to your lender.
Yeah. Okay.
Honestly, before I was in a servicing department, you said escrow, and I'm like, okay. What does that mean?
Yeah.
Like,
Right. Yeah.
my taxes and insurance, but I'm young. What does that mean?
Yeah.
What do I do with that?
What is all that?
So talk to your lender. Let them know, you know, I don't understand.
Yeah.
Is this premium too much? Am I not covered?
Yeah.
Really get them to kind of lay it out for you. If you're having questions with your insurance or even what coverage looks like, get with your agent.
Right.
They'll know what to do.
Yeah.
So really just find resources with your lender.
Yeah.
Make sure your lender is willing to talk to you.
Right. Oh, yeah.
To get those questions answered.
Yeah. 100%.
Yeah. Well, we really appreciate you being here today
thanks for having me.
answering the big question of what is escrow.
Yeah.
I feel like we now know taxes and insurance.
Yeah, exactly.
Yeah, well, thanks for having me, girls. It's been nice.
We are so glad that you joined us today and hopefully got a few tips for your next home loan purchase. If you want to send us a topic to cover on the podcast, or if you have any questions or just want to send Caroline and I an email, you can email us at podcast@tvacreditunion.com.
And if you just can't get enough, follow us on social at TVA Credit Union. With that being said, keep making moves with your money.